Are you counting on Social Security or a 401k to provide you with a comfortable retirement? Do you want to control your own money and get high, safe returns regardless of what the economy does? In this CD, I'm going to reveal to you a safe alternative to the stock market. A successful retirement includes having more options on how to spend those years. Having ample financial resources provides you with more of those options. What I'm about to tell you could unlock the potential for your future well-being. It's time to start running down your dream. Hello, my friend. This is Nate Weaver. I want to thank you for taking the time to listen in as we talk about the little-known world called private lending. What you're about to discover is a great way to earn high rates of return safely and securely in a way that very few people even know exists. On this CD, I'm bringing you a very special message about how you can greatly increase the value of any investment capital that you or your IRA currently has in a CD, money market, mutual fund, commodities, stock market, or anything else. This message is about creating wealth with passive investments secured by real estate for a safe and very attractive return. Most people try to generate retirement income by following conventional wisdom. They let other people control the fate of their money and make the decisions for them. By the time they need the money, they discover that they have barely kept up with inflation and the cost of living has risen faster than their investments. Now let me tell you from the beginning, this CD is not about conventional wisdom, and it's a fact that the comfortably wealthy person who earned his or her wealth does not live by conventional wisdom. If you do things like everyone else, you'll have to be satisfied with the low returns that following the herd mentality produces. The good news is you no longer have to accept low rates of return. You've received this CD, so you can consider joining forces with me for us to create a mutually beneficial and profitable relationship. With my program, you don't have to worry about watching the stock market or calling your broker or waiting for the next crash. My job is to find great deals on properties that may or may not need rehabbing, and I agree to buy them at very low cash wholesale prices. With my program, my private lenders can invest their money and earn high rates of return safely and securely because their investment is always secured with a deed of trust on the property. This is a very lucrative investment vehicle for my private lenders for many reasons. The two most important are 1, safety and security, and 2, higher rates of return. First, let's go over the safety. I do not allow my private lenders to invest more than 75% of the after repair value of a property. That means that if for some reason I were to fall off the face of the earth, you, as my private lender, are left with a huge amount of equity as a safety cushion. That way, if my private lender had to sell the property, they would quickly recoup their investment and even make a profit on the property. I need to emphasize this. The very worst thing that could happen is that my private lender ends up owning a house at a very deep discount. If that were to happen, my private lender could get a realtor to sell it and make even more than their interest. That's not a bad situation at all. Next, a higher return is very attractive. You see, I pay my investors up to 14 times more than what they can earn in a CD and sometimes even more than that. What's more, they earn this high return regardless of what's happening in the stock market. You can rely on it and not even have to worry about the principal fluctuating. The principal remains the same. Now, you may be wondering why anybody would be willing to pay a high rate of return like I do. Well, it's because for me, the quick availability of funds is more important than paying a lower rate to the bank. I look at my lenders like silent partners. I give them high, dependable, and safe returns secured well by real estate, and they supply the short-term capital to grow my business. It's a win-win for everybody. Working with banks requires applications, extra time to close, extra closing costs. Anyone who has ever bought a house with a bank knows how long and arduous this process can be. Banks also have limits as to the number of loans that they can make to any one company or investor. I can move much faster without these limitations by using private lenders. As a result, I can negotiate more profitable deals while offering sellers a quick and easy sale. Making high interest loans is nothing new. There are companies in your city doing it right now and have been for over 40 years. They're called finance companies or secondary lenders. It's a multi-billion-dollar industry. Companies like the Money Store, Coastal Finance, and Beneficial Finance are just a few examples. As a matter of fact, you are most likely using this kind of lending right now. Just take a look at one of your credit card statements and look at the interest rate. Congratulations! You also are a person like me who is willing to pay a higher interest rate for the benefit of short-term money that's easy to get. And of course, the reason you're willing to do that is because you're placing the availability of funds above the cost every time you use one of those cards. Like I said, it's a multi-billion-dollar industry. So here's the question. Why aren't you making the same interest on your money as the banks do? My lenders are. What if we turn the tables on the banks and grow wealthy the same way that they do? Here's what happens. When banks make a loan, they do it with your money. That's the money that you're allowing to lie around in savings accounts and CDs at low rates that net less than the cost of inflation. You receive a few measly percentage points while the bank loans your money out at higher rates. They receive the difference, which is referred to as the spread. Now, the spread amounts to billions of dollars monthly. That's why the banks have all the big buildings. So why don't you become the bank? If you can borrow money at a low rate and safely lend it out at a higher rate, you can make a fortune off the spread. Now you're making money off the bank's money. Now that's just a no-brainer. When you don't have to use your own money to make these investments, you actually have the best rate of return of all. It's called infinity. You see, when you have none of your own money invested, you can't measure the return. Some lenders have used low-performing assets like a home equity line of credit on a free and clear home or a portfolio loan from their stocks or mutual funds to do this type of investing. By leveraging these low-performing assets, they were able to watch their money actually start working for them in a more efficient way by exponentially increasing their returns. Well, I'm sure you have other questions concerning private lending, so I'll address the most common ones right now. First question, can you use your IRA or 401k to make these loans? And the answer is yes, absolutely you can. In fact, it's a great use for them. A wise way to invest is to do it tax deferred, or in the case of a Roth IRA, tax free. Now, if it's an IRA, it must be self-directed, and if your IRA is not set up this way, that's okay. This is easy to accomplish, and it's only a matter of moving it to an administrator of your choice. I recommend Equity Trust, located in El Rio, Ohio. They specialize in helping private lenders maximize their returns using a retirement account, and they are wonderful to work with. Their website is trustetc.com. Just go on there and explore for yourself. They've been around a long time. I also have a brochure on the company just for your asking, and I have a contact person if you'd like to talk to them directly. They have thousands and thousands of IRAs, and I think you're going to find them a pleasure to deal with. Now, don't worry, this is not a rollover with penalties from the IRS. It's merely a transfer from your current administrator to another one. If you're going to use your IRA to make loans, you'll find this a necessary step because most people have their IRAs housed with a company that will not allow them to make loans or, in fact, do any kind of investments other than what's on their list. We call those multiple choice IRAs, but not truly self-directed IRAs. With Equity Trust, you will be able to do whatever you want with your money, not what someone else insists that you do. Now, if you're using a 401k, you must be in control of it or writing a check. If you don't have control over it, you'll find it difficult for your employer to direct the pension plan into private loans. They're usually managed by stockbrokers with set guidelines, and they'll do whatever they want, and you won't change their mind about it. However, if you have left your job or retired, that 401k belongs to you. And by law, the previous employer has to allow you to transfer it to a traditional IRA. In this case, you'll want to check into transferring it to Equity Trust, and then you can start making private loans and truly start self-directing it. I know several lenders that take the money out of their private plan and shift it into their own self-directed IRAs. You might want to consider the same if it applies to your circumstances, and of course, if your company doesn't have a history of a high rate of return that you're happy with. Second question, is this a security or a mortgage pool? The answer is yes and no. Technically, any debt instrument is a security, but it's not a security that you're going to need a license for or have to register with the SEC or anything of that nature. You will own the whole loan with no other participants. You are in control all the way, which in itself makes this a better investment than any other vehicle that I know of. Only when loans are pooled does it officially become a security. We are not pooling investments here at all. When I find a house, I know what it takes to get the job done. If I do need to borrow more than you have available, then I'll have another private lender come to the table, or in some cases, I can fund the deals with more than one investor by simply giving one investor a first mortgage or deed of trust and the other a second mortgage. They are two separate loans but secured by the same property. Of course, the second mortgage holder will know it's a second mortgage and be willing to accept the inferior position in exchange for an even higher rate of return than a first deed of trust. But frankly, it shouldn't matter as long as the total loan-to-value ratio doesn't exceed 75% of the after repaired value. Let me give you an example. If the property's value is at $100,000 and I need to borrow $75,000, I can split the loan into a $50,000 first mortgage and a $25,000 second mortgage. Both loans are still well secured because the total loan-to-value ratio does not exceed 75%. Third question, who handles the paperwork? Well, it won't be me and it won't be you. Please never write a check directly to me or my company. All real estate closings will be done by a real estate attorney. Your check will be made out directly to the closing agent for the gross amount of the loan. All closing costs will be paid by me. This is standard procedure, just like any other loan done from anywhere, regardless of who the lender is. It then becomes the real estate attorney's responsibility to receive your funds and make sure that all the documents are in place to secure your investment. You don't do any paperwork, you simply agree to make the loan and then get the money to the real estate attorney when it's time. Next question. How am I protected against fire loss and making sure that the title is clear of liens? First of all, I purchase title insurance as part of the closing costs on all purchases to ensure that we have a clear and clean deed. And it will be issued naming you, the lender, as the insured. This protects you against title defects which could affect your collateral. Plus, I purchase fire insurance as part of the closing costs as well. I want the fire insurance company naming you, the lender, right on the policy, so if the house burns down, you get a check for the full amount of your loan. Now, when you receive your package after the closing, it will contain the original note and a copy of the deed of trust, which will be recorded at the courthouse. Again, the real estate attorney represents you and makes all this easy for you and ensures proper execution. Next question, is this a long-term investment? Well, it's really up to you and me. Most loans are interest only and range from 1 year to 3 year balloons with all the principal due. However, this can be arranged any way that you want to arrange it. It comes down to whatever it takes to meet your investment needs and your investment plan. Of course, the longer the money stays out at a higher rate of return, the faster it's going to grow. If it's interest only, you're earning interest on the entire principal all the time. If you were to get a little piece of the principal every month on an amortized loan, then that little piece would no longer be receiving a higher rate of return. So most of my private lenders like to keep the money out and collect interest only or have it accrue interest. Next question, is making private loans really a safe investment? If you apply common sense and don't break the rules that I have in place to protect you, it's as safe as any other high-yield investment and a whole lot safer than most. In fact, in my opinion, it's a lot safer than the stock market. Think about it. With stocks, you're betting on companies you know little about, and the volatility of the market is out of your control. You can do well 1 year, get wiped out the next. Every day you're wondering whether you're gaining or losing, and the only choice that you can make is when to buy or when to sell. Now that's risky. I don't care how good you are. The fact remains, you don't get to make the rules in the stock market. Your investment is at the mercy of the ever-changing circumstances. Now compare that to these private mortgage loans. With mortgage loans, your return is fixed and it won't change regardless of whether the market is up, down, or sideways. While the stock market spirals downward, other investors are freaking out. You'll be smiling because today's fickle circumstances didn't affect your money. Your loans are secured by real estate that you can see, and they aren't going anywhere regardless of what the stock market does. You have a large hedge factor to protect yourself if things don't go as planned. You get to make the rules, not be a slave to someone else's rules. The term, the rate, the conditions are what you and I say they are. There's no guesswork as to what's going to happen. You and I will be building our business relationship that could lead to other lucrative opportunities or joint ventures. You see, when people like us build wealth together and prosper from each other's efforts, it sometimes even leads to other opportunities. I don't know of any other investment opportunity that gives the safety, stability, and high return that private lending offers. As a potential private lender, I'm sure you have some questions that I would be glad to answer for you. Just get back in touch with me and I can get all your questions answered. Until we talk again, I'm wishing you a very profitable future by becoming Nate Weaver's next private lender.